public policy, so we used to draft those regulations and level 2 requirements that ever at TEST and ESMA. I also worked at the European Banking Authority, and I worked at the crypto asset service provider company, which is based here in Austria, and then we got to Vienna, Sweden. I'm glad to be here and to discuss the topic on crypto asset markets, in particular one of the most emerging topics, tokenization of securities, such as shares, bonds, and regulatory regime on them. I think we all have heard or read headlines about investment firms or crypto asset companies that are offering trading 24/7 in shares or bonds, and they are offering instant settlement wide variety of instruments with the most popular shares. But actually what those companies currently are offering for investors is derivative contracts, and investors are not owning or not buying real shares, but investors are buying derivatives that are issued by those companies. So it is kind of misleading practice, but actually it is legal. And usually those derivative contracts are backed up by companies, so it means that companies buy on balance real share, which they sell derivatives on for investors. So I would say it's kind of safe practice, but the key difference is that investors are not getting shareholders' rights. So it means in such case, shareholders do not get a right to vote, right to dividends of real company, and right to proceedings of this company in case of liquidation of the company. But actually, this gap of what those companies are promising for investors and what investors are buying is already addressed by regulation, and the DLT Pilot Regulation did that because it enables true tokenization of real shares. And by saying enabling, I mean that investors can buy really tokenized shares, not derivative of some other company, and think that they are buying a real share. So the DLT Pilot Regulation came into market together with MiCA, I would say, because the European Commission acknowledged that DLT has a lot of advantages to offer to capital markets to make it much more efficiently. And they introduced this DLT pilot regime. But actually, during 2 years, when they developed DLT pilot regime as European Council, becoming discussions during 2 meetings about this DLT pilot regime, because all experts were focused on MiCA. It was more trending topic, or maybe it was done on purpose, some strategic decision to that, and it ended up to be only pilot regime. So after Parliament reviewed the pilot regime, a lot of companies developed, traditional companies like Romena, and it has some issues currently for small market participants. To explain it very briefly, I will start by explaining how traditional market works now. So we have investors on one side and issuer of securities on other side, let's say shares, for example. When issuer wants to issue a share and to sell to investor, underlying process involves a lot of intermediaries, and usually first step what issuers do, they must register ownership at Central Securities Depository. And Central Securities Depositories do not allow to have direct participants, but they wouldn't allow for me to be participant. They ask investment firms or other companies that provide such services to be participants. Then investor needs to have accounts, securities accounts at intermediary, and every time when transfer of ownership occurs, Central Securities Depository needs to record the transfer. Central Securities Depositories also maintain settlement systems, so in order to purchase a security and to settle for that security, it takes at least 2 days and a lot of reconciliation, record wording, and so on. And in addition, if investor wants to trade the security, it must go to another entity, so called trading venues, and find investors from other side. But actually what the DLT market can do, it can have only two counterparties, it is investor and issuer, and all this process, which involves a lot of intermediaries, can be simplified and done by only DLT. So ownership would be registered in DLT, now public or permission ledger, and every time a transfer of ownership happens, you just have records, and it's very, very simple process with instant settlement, no reconciliations needed, and so on. But of course, in this model, the investor to issuer usually they will not. You would have some intermediaries between those two, because some intermediaries need to do KYC, IML, to do whitelisting. Or those intermediaries are also responsible for operating of all DLT ledger. So they are entities who should ensure that everything happens well. And now, I think I cannot see my slides. Yes. So I explained very briefly how it works now, but what the DLT pilot regime allows, it is very important to change definition of financial instruments across all European countries, and by changing this definition, it acknowledges that financial instruments issued by DLT must be treated the same as traditional conventional financial instruments. So it means the same rules, the requirements, the risks apply. And the DLT pilot regime have three types of systems. So one is DLT MDR, which is trading. It allows trading, but means settlement can happen outside. Another type is DLT settlement systems, when trading takes place on trading venue, let's say Nasdaq, for example, and settlement is done on that DLT settlement system. And the third type, which merges both DLT trading and settlement system, so it basically allows to have under one entity trading of real securities, settlement, and recording of ownership of those securities. And actually in traditional markets, usually we have many intermediaries, and they cannot merge functions of trading and settlement. And DLT allows this kind of innovation and thought that one entity can do everything, and investors can get everything from one entity. In general, this definition, this DLT pilot regulation is based on exemptions. So it means, for example, if you have trading venue, it is subject to MiFID requirements and MiFID requirements. Even if you trade under DLT pilot regime, it allows you to ask for exemptions from traditional regulation. So you can ask, for example, in the MTF trading venue case, that you want to onboard directly retail clients. Traditional trading venues cannot do that, and DLT infrastructures allow to onboard directly retail clients. Other exemptions are reporting requirements, settlement requirements, because those DLT settlement systems or trading and settlement systems do not use euro, because for them it would make no sense and would not make efficient all this process. But those systems are using e-money tokens, stablecoins, and all of them are waiting for central money digital currency. One issue with this DLT pilot regulation that it has limits on assets. It allows only simple, non-complex assets, for example, listed company shares, bonds, UCITS, but it does not allow more complicated assets. There are also limits on thresholds. So as I mentioned before, it is pivotal regime, so European Commission created it for the purpose to try for 6 years to work in this environment, and even not to do it in sandbox, as usually it is the case, but to do it with investors and real business, and then they will see how it works. And another issue that it is permission is granted only for 6 years, but probably there will be review and they're going to change it. So in the slide, I just wanted to show all process that I explained in first slide more in detail. But as you can see, you have issuer from one side and investor another side, and DLT trading and settlement system can do all these actions under this side. But so far, this DLT project is not very successful because DLT is live for almost 4 years, and we have only 4 market authorities who are authorized under this pilot regime. And one of them is Axiology, where I work. Axiology is trying to do tokenized bond markets, and especially we are focusing on government bonds. Government bonds outstanding amount in 2025, for example, in OECD countries, it's 60 trillion euros, so we can imagine how much efficiency this DLT will bring to this overall process, especially if those government bonds can be offered directly to retail clients. Another 2 projects are based in Germany, is 21X, and actually they do self-custodian wallets, so investors are doing self-custody of their securities. But this all, they also got a group license from BaFin, so it means they are also secure and operational. Another one is Fragmentation, which is traditional depositorium, where they decided to experiment with the DLT regime, and I think they registered 12 million shares, and X360X is standardized traditional MTF, but they have another MTF for DLT trading, and they are trying to develop new settlement system. So as I mentioned before, this regime enables real tokenization, and I think this is the future of financial markets when we get rid of these traditional, very expensive systems. And when we get rid of regulatory uncertainty in regulation, I think we will see much more market participants. Now, not only national competent authorities need to authorize market participants, but also ESMA. And ESMA recently published a report what does not work in this regime. French authority did the same thing. They also issued a report what does not work in this regime and suggested very concrete measures. And market participants also agreed with their opinion. Like, in order to enable it to work, first we need to expand scope of assets, because now it's only non-complex assets, but actually with it's called non-execution only assets. But actually, if you do give appropriateness tests for investor and investor agree with risk, it could include other assets as well, like alternative investment funds, structured products, asset-backed securities, for example. Another issue is that it is a regulation which is based by case-by-case exemptions. It means that Lithuania National Authority can give exemptions, and based on non-compensatory measures that this DLT pilot project present, and German authority can have different approach. So we will end up having very fragmented market in European Union, and ESMA needs to give their own opinion about exemptions and blockchains that are used by those projects. So it also prolongs licensing process very much. It took for us to get a license in 14 months, so it's quite good timeline. But we have mostly former regulators at our company who work at Central Bank of Lithuania, and we knew process, and we are very well prepared. But it took probably 7 months to get opinion from us and to engage into discussions with them. So yeah, that was briefly about DLT pilot regulation and projects that are currently licensed in this regime. And I think it goes hand in hand with crypto asset market, because as I mentioned, young retail investors are used to the DLT market, and for the future, they will trade shares or other securities using DLT, not in a traditional way. Another thing we need to use, for example, e-money tokens in our system. And in general, for investors, it's a good opportunity to have the diversification in their portfolio if those markets would be merged together. Thank you.
Thank you, Romena. Now, I think, yes, our next speaker is Alexandra Lloyd, Risk and Compliance Manager. And you